Welcome back. Earlier today, it was reported housing starts hit 2023 highs, topping 1.5 million units for the first time in 2023. This is reported by the Mortgage News Daily, but we're going to tell you in a moment why this might actually not be such good news. We can see the blue line represents new privately owned housing units started. The total number is 1560, but these are in thousands of units. So this is 1.56 million. The red line represents single family units. The yellow line, and that's at 1143 or 1.143 million. The yellow line represents the buildings with 5 units or more. These are considered to be larger construction projects. And then we can see a very small line over here. Those are buildings with 2 to 4 units. It's kind of inconsequential, so we're not going to talk about it. But the big takeaway from this, notice the blue line is at the highest level we've seen. That's new privately owned housing units since May. That's the highest high. The red line, again, single family units, that is the highest high in more than a year. We have to go back to 2022. Now, here we see red line represents single family units, yellow buildings with 5 units or more. And this really does tell a story. Let's go back in time to 2006, 2007, very strong economy, very strong housing market. Well, we can see the single family units, it's always going to be more than the buildings of 5 units or more. It's a lot easier to make one house than a whole building. But nevertheless, we see the spread. There's a far greater amount of single family units during very strong economies like 2006 than there are buildings of 5 units or more. When the economy once again improved, and we're looking at years like 2018, 2019, single family units, again, this spread really did increase over time. But conversely, when we go into economic trouble like 2009, the spread between single family units and red buildings with 5 units or more decreases. Here's another way to look at it. The red lines represent single family units year over year. So it compares this November to last November. 42% on a year over year basis for single family units. This is the biggest increase we've seen in a long time for single family units. The yellow line, 5 units or more, that's down 34%. Now, that's pretty much in line from what we've seen recently over the past 4 months or so. But we can see the trend is definitely in favor of single family units, again, making more than 1 year highs, whereas the 5 units or more are at least yearly lows or very close to it. Here we can see on a year over year basis, and this is zooming in a little bit closer so we can really understand what we're looking at here. Single family units. Now, we can consider this to be more of a speculative instrument. Why? Because when single family units, such as homes, are purchased at a greater rate, that's done with smaller purchase price, and it's not really done with large investment groups. Whereas if we purchase or a building with 5 units or more is constructed, then that certainly involves a lot more investment, a lot more research. It's considered to be, for lack of better words, a smarter money. The smarter money is going into the bigger investments, like the buildings with 5 units or more. So, what does it tell us when the speculators, the single family units, are at more than 1 year highs versus the investment group, as is at least or very close to yearly lows? Here we can see the yellow line single family units. Now, this is a percentage of all construction. So the yellow line is single family units. The white line is buildings 5 units or more. The red at the bottom, that's 2 to 4 units. It's pretty inconsequential just because there's a smaller frequency of this type of construction projects, condominiums with 2, 3, 4 units and such. But we can see, for example, very strong economies, 2006, 2007, single family units as a percentage of all construction represents 80%. The buildings with 5 units or more at that point only represented around 20%. But coming into the financial and housing crisis of 2008, single family units went down. It only represented 60% of all the construction out there. Whereas the buildings with 5 units or more, that went up to 35, 40%. And it makes sense because during a crisis, it's really the smart money, the investment crowd, the buildings with 5 units or more, they're the ones that come in with greater amounts of capital and greater amounts of risk tolerance, and they'll step into a bad market to make a construction project, whereas the single family units were a lot more sensitive to economic conditions, were a lot more sensitive to interest rates. Well, where are we now? Right now, single family units as a percentage of all construction, it's around 70%. Buildings with 5 units or more, around 30%. So we are looking at more of a speculative type of condition. Zooming into the same numbers at a little bit of more detail, we can see single family units in white, again, around 70%. This looks like it's almost new highs, or actually probably is new highs going back at least a year. We're probably in more of a speculative condition in terms of the housing market than we've been in for a long time. The smart money, buildings with 5 units or more, it looks like we're at least 1 year lows and probably more than that. So while speculative markets, and we can compare this to, for example, the NASDAQ, the more speculative stocks, they go up under risky markets. Now, risky markets do go up and they continue to go up, but eventually we know risky markets eventually turn to the downside. Now, if we're curious to see what has a closer correlation overall to the S&P 500, we have new privately owned housing starts. This is the total number. That has a 14% correlation to the S&P 500. And by the way, we're looking at data that goes back to 2001. This is a lot of data. So these numbers are pretty reliable. Single family units, about a negative 3% correlation. By the way, when we see correlations plus or minus a few percentage points, it really doesn't tell us very much. We want to see a correlation of either above 50% or below negative 50%. Buildings of 2 to 4 units, that has a negative 40% correlation. It's a little bit more indicative, but this represents a relatively minor part of the housing market. Whereas buildings with 5 units or more, the investment crowd, that has a 73% correlation, a very strong correlation indeed. A 100% correlation means when one stock goes up by 1 point, the other goes up exactly by 1 point as well. 73% is a very strong correlation. So we should really focus on the buildings with 5 units or more if we want to see where the S&P 500 may be headed. Where is it headed? Well, let's take a look. S&P 500 in red. The white histogram bars show us buildings with 5 units or more, and this goes back to 2001. Notice 2002, 2003, recovering from the tech bubble, buildings with 5 units or more. And again, this is a percentage of all construction projects. It was about 20%, came down to around 15% at the weakest point, but it started to recover. NASDAQ and S&P 500, other indices moved to new highs, and we can see eventually buildings with 5 units or more at 35% of all construction projects. Well, eventually S&P 500 went to the downside in a big way. Financial crisis of 2008. That's when we saw a real capitulation. Only 10% of those construction projects at that point, actually, that's a little bit ahead of time. We can see that 35% of buildings with 5 units or more coincided with the bottom of the S&P 500 stock market crash. That's because a smart money jumped in. But then we can see this number plummeted. Why? Did buildings of 5 units or more plummet as well? Actually, not. It's the fact that the speculative market, the single family units, did resume their strength. And that's why we saw the percentage of all construction projects representing 5 units or more that declined. Again, this decline does not represent a decline in projects of 5 units or more, but rather it represents an increase in single family homes. But they were a little late to the game. We really would have wanted to come in when the buildings of 5 units or more began that huge construction spree. So the takeaway from this is we see here single family units on a year over year base up 42%, buildings with 5 units or more down 34%. It shows us, well, we could say the trend is your friend. And maybe this is indicative of strong housing markets to come, but we are in a speculative pattern. Speculative patterns can continue. Risk on markets can continue to go up for a long time. A 2005 stock market rally continued up to 2007. A 2015 stock market rally continued through 2018, 2019. So the trend is your friend, but please be aware we're hitting extreme highs in terms of new housing starts. It can be considered a leading indicator to the housing market. It doesn't mean it's going to turn tomorrow, but it does show us we're at pretty extreme levels, and we should be aware of that. We have more housing market numbers later on this week as well, GDP figures, and much, much more. So please stay tuned, and we'll be sure to update you along the way with any significant changes. We hope this has been helpful. We look forward to seeing you back soon.